We welcome and thank you all are joining us here today for this Q1 earning call. We have uploaded our earning presentation on our website also, and I trust you had a chance to review it. I will present you an overview of our quarterly performance, the prevailing and projected industry environment, and the financial performance of the company for Q1. So, highlight is that we started this Q1 on a very positive note, and we achieved a growth of 5% and achieved a revenue of like 306 crore rupees. And this growth is basically, supported by a strong support from our MSME customer, which is contributing almost 50 to 51% revenue to our overall revenue. And in spite of continuous high inflation, our margin has been further improved by almost 30 basis points, and we maintain our PAT level margin on 10.6%, which is the highest in this industry. And our utilization level in truck in this quarter was again is around 83.5% plus, and yeah. So this is some extract from our MD's comment on this business. So we as a management team, we hopeful to the manufacturing sector is receiving strong government support, and it is leading to we anticipating a growth of 13-14% in volume and 15 to 16% in my revenue part. And this companies ramp up their production activities. The demand for express logistics is expected to be shared in time to come. And this trend is likely to boost a significant growth in the express logistics industry as business rely more into heavily on efficient supply chain management and transportation services to meet increasing demands. So this is our focus on that. And you all aware that this Pune has already been operational in 2021, and we are now in the process to be automate the same. And hopefully we will be get it automated by this full year end by 2024. And we are happy to announce that we received this LEED certification for this our two center, both Tajnagar and for this Tajnagar center. And this is for sustainability basis, they covering like 3-4 aspect of that, and we did that well, and that's why they award this LEED certification to us. Yeah. So again, after this our demerger, we completed successfully like 7 year plus, and now our workforce is almost 3,500 plus, and almost we serving 60,000 location on basically 60,000 location for pickup and delivery, and we expanding our branch network continuously, and branches has reached on 950 plus. Yes, please next. So our USP and continuously we focusing on improve our operational efficiency, and that's why we more focus on automation, including and consistently we drive by a satellite model and high value cargo movement. We need a very working on very low working capital. We have the very lowest cost structure in the industry. We also expanded on a similar kind of services since last 2 years. And obviously we have our own branch network, so we don't have any franchisee, and have the kind of countryside 100% is a countryside movement. Yeah, and we are now the latest one is like we are continuously focused on our automation, and one already did, and second one will be happen in this FY year end. Yeah. So this is some our network efficiency and service of what kind of service we are offer. So this is there. Yeah. And this is the performance, quarterly performance we have, like we achieved 306 crore revenue with a growth of 5%. Margin has improved by 30 basis points, and PAT level has maintained on 10.6%. And yeah. In current quarter, we have not done major capex of that, and we had done a capex of 4 crore rupees only in this quarter, and it means basically for spend money on IT equipment, procurement and digitalization that we had done. And in this quarter, we opened up 5 new branches, basically in West and South region. And this is like performance of last, 5 quarters, and you can see consistently we improving our margin levels on EBITDA and PBT level. So, this, our basic strategy again, to have the diversified client base, corporate and SME, that will be continue in time to come also. And this is a basic strength. Wherever we have the challenge, supposing in corporate customer, then we get the support from the SME customer, and that will be continue. And again, we will be keep continuing expansion our branch network in metro, tier 1 and tier 2 cities. And new value services are also maturing, and we gradually focusing on that, and they will become like we have taken a target to be in the range of 20 to 25% by in next financial year, and we are focusing on that. And also like government is also taking so many, I will be explain on later on slides, where government is also giving so many thrust on logistics sectors strength, and we are doing continuously on that. And again, my capex plan is for FY28. We want to be spend like 500 crore rupees, and this is the second year onward. And last year we did 125 crore, and remaining 4 years, including this year, we will be spent remaining 375 crore rupees. Yes, please. This is again strategic for what we did on taken for the 2025, and we're targeting a growth of 1750 for by end of next year. Yeah. This is our giga center in Taj Nagar, which is in the size of 2 lakh square feet, and this is a fully automated one, and we're getting the kind of traction of the customer, and we have improved an operational efficiency there. We able to reduce our turnover time almost around 60% on truck side, and once we will be, this is the only one we have did. Once we will be doing second one and third one, then we will get the more benefit. With this, we are able to cut my direct cost almost in the basis of 15 basis point in overall basis. And with the, so we will keep this strategy going on, and in next, like in 4-5 years, we will be put like 7-8 more centers, which will be fully automated. Yeah. This is a rail express. This is continuously getting high traction from the customer, and it is highly profitable business. And our customer base has reached to 2,700 customer right now, and our routes doing that is 100 and 125 routes we are serving right now, and is getting high growth in this segment, and we are hopefully to be reach in FY23 25. We want to be reach on at least in the range of 4 to 5% of overall revenue. This is a pharma cold chain. The pharma cold chain is also gradually growing, but we are not thrusting more into that, because India is slightly cost sensitive market or price sensitive market, and we also like focusing only on pharma cold chain. So that's why scope is very limited. So that is going on, but it's very low pace. Yeah. And C2C, yeah, this is a new segment. This is a new niche segment, and we almost reach on 5 to 6% on this segment, and it is contributing to our overall revenue a very good way. And as time to time, I explained that one. It is a basically high profitable business, and we are growing it on a very. And it is also like asset light model where we are not putting any capex on that, and getting good return on capital on that one. So this is the last, key takeaways we had taken in the last 7 years, and like we increase our location from 32,000 to 60,000 in last 7 years, and also like branch network has increased from 500 to 950, and sorting center not increased much, but yet from increased 26 to 28. Customer base has also increased from 1.6 lakhs to 2.25 lakhs, and on-side 7-year track record of profitability, like CAGR of we grown our EBITDA margin fantastically on 21% and net profit of 24% in last 7 years. And we also maintained 35% of return on capital employed since continuously. This is again, we are the debt-free company, and we will be keep that status continuously. Yeah, we can be, we already discussed on the last, we can be skip please. Yeah, this is also again our 6 years track record you can see here. Yeah, please. Yeah, these are key ratios. Again, you can see like we maintaining 35% plus kind of capital return. Cash conversion ratio, interestingly, is also very high. Like we always maintain in 60 to 70% plus, and that's why we are, working on very low capital requirements, and hardly our net working requirement is only 15 to 20 days. And since last 1 decade, I am saying. Yeah. Next, please. Yeah. Next. If you see, compare with the industry players, so we are the highest profit margin generating company, and that will be, hopefully we will keep continue that pace. Yeah. Next, please. So these are the basic, these are the growth driver for the Indian logistic industry, and this NLP and this will be help a lot to this industry to be, integrate the various component of that, and this is the same way Gati Shakti National Master Plan will also like help to all logistic companies to be, boost their businesses, and ULIP is also there, and this is also a good news, like India logistic industry has moved up to 6 places to reach the 38 ranks out of 139 countries. And this year's announcement of like multiple infrastructure project worth rupees 108 lakh crore is also helped to be improve our road sector basically. And this year government has pushed like 10 lakh crore rupees, carve out for the infrastructure development, and major component will be going into in road sector, and construction of like 6,600 kilometer of highways. Government has taken that initiatives. And logistic industries employ almost 2 crore plus people and is a major source of employment. Yeah. This is a management team. There is no big change on that. Sustainability, we also did part of our annual report in this year, and we give an extensive detail working there, and we will be also release a separate ESG report in this year only, I think within the 1 or 2 months. So we are highly focusing on our management thought, our MD's thought is there. We have to be, whatever business we are doing, it has to be sustainable on all the pillar of the sustainability, and we are doing that. Yeah. Yes, please. And on award and recognition, we are also continuously, happy to announce we are getting various award in this last 6 month or 1 year time, and part of that is a very honoring time for us. Yes, please. And this is the, you can see after the merger, we have given a return of 27% on our share, and that is I think every shareholder, taken the benefit of that, and we will keep continue to that pace. We will not be let down to our shareholders on that. Yeah. Thank you. And Chandra sir, you would like to say something on that?
So, thank you, shareholders, for being here and in the investor call, Q1 financial year 24. I'm very happy to see the performance of Q1 in the positive direction. Rest of the year will also be, in lines with what our expectation is for the year. As the economy opens up and gears up for further growth, his aspirations to reach $5 trillion will be definitely conducive to our express logistics business. With this, I thank you, and we can take on some questions now.
Participants can raise their hands to ask questions. Look, sir, you can ask. Go ahead.
Hi, good evening. Sir, I just had a couple of questions. Firstly, on the growth side, so this year we have grown at around 5% on a kind of a already weak quarter of last year. So what's the outlook on growth now? Because to maintain a 15% growth for this year, we would be requiring quite a big jump up in the remaining 3 quarters. So just wanted your thoughts on that first.
Okay, so couple of things. First of all, that we have been, the economy has been already on a much higher base growth since COVID, and that base growth is now equalizing. So, which means that if we had like 22% profit top line, then we had 18%. It's but obvious then 15%, and it's obvious that the high baseline is now equalizing. So this is totally in trajectory with the economic growth. Rest be assured, there's not going to be any change in what we have projected about the 12 to 14% growth top line, and this will be in tandem with the economic growth also.
Sure. And on a
I'm not able to hear.
can you hear now?
Yes, better.
Yeah.
I can't hear.
Hello. Hello.
Yes, Alok, please carry on. Yeah.
Just question on the margins which have come off quarter on quarter. Do we see that going back to 16% plus in second quarter onwards?
Yes, this is sure, Alok. Actually, like Q1 is always started as a week, and if you see on a year-on-year basis on this quarter, we improve our margin level of 30 basis point, and that will be continuing quarter-on-quarter basis. And it's always, margins are, slow in comparison to Q4, because Q4 is always the highest margin quarter. So certainly we will be improved in this year.
Sure. That's all from my side, sir. I'll come back in the queue if I have more questions. All the best.
Thank you.
Janil, you can go ahead next.
Yeah, am I audible?
Yes, Janil, please.
So, sir, first question on the volume side. So, what kind of volume we did in the first quarter?
So volume in this quarter is 240,000 ton we did in Q1.
Okay. And sir, can you bifurcate the revenue of other services during this quarter out of our total revenue of 306 crore versus same of the last year same quarter?
So now, this all services ratio is like, we are earning around 17% revenue from these all other services put together. This is like C2C and rail, air, e-com all put together. Like e-com ratio has been reduced from earlier we have around 5%, now it is reduced to 2.5 to 3% only. And if you put together, it is around 17%. And last year, same quarter, it was around 15%.
Okay, sir.
Yeah.
Got it. And sir, like we have given the outlook earlier of around 15-17% growth, wherein we have taken 2% price hike growth. So how has been the acceptance of those price hikes in the first quarter?
So first quarter, as per plan, we have taken a price hikes of like 75 basis point to 1% in this quarter, and hopefully we will be get further in remainder part of this year. We will get the price hikes of around 1% more. So hopefully we will be, did with 2% price hikes.
Got it. And so just last question on this 750 crore of our revenue target. So that would be growing at somewhere around 30% plus for this year and next year. So how we are looking at that particular target in the top line?
Yeah, Chandra sir, you would like an answer on that?
Can you repeat the question, please?
Yes, so sir, we are standing at around 1240 crore of revenue last year and around 5% growth we have seen in this particular quarter. So, and we are targeting somewhere around 750 crore plus revenue in FY25, which would be around 30% plus growth on a YOY basis for consistent 2 years. Whereas the growth has been on a single digit for this particular quarter. So, how we are looking at achieving that particular guidance?
750 crore, I'm not sure.
750,
It is
1750.
1750, yeah, Jainam, yeah.
Yeah, 1750. I'm talking about 1750.
So you have to again see the level of the economic play. All right, that is very, very important. And again, it is something which is possible to do that much amount of business also, but at what cost? It'll just be, I'll be paying 10 times, we will be paying 10 times of the cost, 100 times the cost to do that business. So we don't want to be in that level. So if the economy is growing, as I have always said, at 12% this year, then, if we, at 6% this year, we will grow at 12%. If it's at 7%, we will grow at 14%. So that is no change in that.
Got it.
Compared to what it
Yeah.
and compared to what it was a while back, things are much different post-COVID. So please keep that in mind, that the top line is again will fluctuate. What the guidance we had given 4 years ago is very different from where we stand, only because of the how situation is evolving globally. We never expected the war to happen, which has globally pushed the inflation so high. People have stopped consuming. So I think this trickle down effect of the high interest rates and everything will possibly be also seen in the economy. But logistics again is such a sector that it'll keep continue going. Even if the economy slows down to 5% or I think even to 2%, the logistics will keep continuing. So I don't think that it's static or it will be static in other larger economies.
Got it, sir. Got it. Thank you.
Mr. Krupashankar, you can go next.
Hi, am I audible?
Yes, please.
Yes. Hi. Good evening, and thank you for the opportunity. So, a couple of questions. First is on margin specific. I did see that on a quarter-on-quarter basis that utilization levels have come off. Of course, factoring in the 1Q effect, but margins, of course, have held strong. So, is it is there contribution from other services due to which the margins are relatively higher, or are we seeing benefits of the automation in the Gurgaon facility due to which you have seen that margins have relatively held?
Yeah. So very good question, Kripashankar. Basically, the combination of three things. Yes, obviously we get a benefit of this automation. Like I said, the 15 basis point benefit we have taken from that, and also like price hikes we have taken from the customer in this quarter. And third one, usually this 83.5% is also like contributing a good way. This fill factor of our trucks. So these are combination of three things put together. We have been able to benefit of this, improve this margin level by 30 basis points.
So Mukti ji, would it be possible to share, as I could see that you had mentioned in the presentation as well that the new services are maturing. Would it be possible to throw some light on, what would be a contribution from railways or other services?
So as I mentioned, we not giving the specific number for these and few new services because these are not big numbers right now. So if you put together in this quarter, we have achieved 17% growth, on these sector like put together C2C, rail and cold chain pharma and our air domestic and international and e-com put together.
Got it.
One more. I would like to express here like rail getting good traction from the customer because we giving the fight to our competition on that and on a very good rates and with a good margin level. Actually we so we reducing our customers rate almost like 2/3 and or even more than that and getting the good profits also and with the same kind of service level what we competition giving on air. So that's way customers are happy, but though we need to be this is a very niche segment, so we have to be convinced to customer, then they taking as a pilot consignment to us, and then subsequently we have to be once they're taking this as a service level, then they are trusting us and then giving the new cargo frequent cargo for that. So it will be growing very, fast on that.
Got it. One more question from my side is on the pharma side. I thought so. What we hear is that the government is intending to propose mandating pharma cold chain for pharma sector. That's what was communicated on the TCI call. So just wanted to get some commentary from your end as to how much of a benefit you believe we can get with this transition to cold chain for the entire pharma sector.
Chandra sir, you would like to answer on that?
So, I have recently been nominated as the co-chair for the FICCI Infrastructure and Logistics Committee, and the plans are still being worked on. This is nothing which is set in stone. And of course, if this happens, if it's mandatory, then it will be a good, definitely a good, very, very good opportunity for us.
Got it. Thank you and all the best.
Mr. Keshav, you can go next.
Hello.
Not able to. Yeah, please.
Yeah. So my question is on branch addition actually. So initially we used to see figures in the range of 25, 27, 30. But lastly it has come down to single digits, 5, 7. So has the level saturated? Of course, you're not in.
You are on mute, Mr. Keshav.
Next question. We can take the next question, Mukti.
Yes, please. Yeah, please. Next question.
Next question is from Amit.
Yeah, please.
Yeah. Hi. Good evening, everyone. I hope I am audible.
Yes, you are audible, Amit.
Thank you so much, and thanks for the opportunity and thanks for the presentation, sir. I have a couple of questions. The first one is essentially, where do we see growth coming from in this? On all the segments that we operate. Is it from auto? Is it from manufacturing in general? Where do we see growth for this year, actually? And in this quarter,
I would like to answer that. First of all, MSME will play a very big role. Okay, and it is something where we have seen that the auto has gone through a very like a nice boom. But again, it's a very cyclical industry also. So whatever we are doing with MSMEs, that will continue to flourish. We will also see other sectors like IT and technology also being playing an important role in going forward. So because we don't have all our eggs in one basket, we are very well stabilized to perform as per how the economy is growing in all the industry sectors.
Okay, fair enough. The second question is essentially on the sorting center in Pune. Now, you indicated that you got 15 bps benefit from the sorting center in Gurgaon. Now, with Pune also coming up, there should be some synergistic benefits also. Because now between point A and point B, you will get the benefit. So is it possible to quantify what kind of margin improvement we can expect from both these centers coming on board in FY25?
Yeah, so, Mr. Amit, you rightly said, once we will be stable this, this Pune center, then we will get the right benefit of that. Because in what we did right now, we are only one center and we are not able to get the full benefit. So once we will be came up with this, and synergy would be there, and I think we will get the overall benefit of 40 basis point once we will be stabilize this operation of this new center. Of that, already 15 basis point benefit is there, so remaining 25 basis point benefit will be also come for that. And basically there is a 3-4 benefit of this center is there ultimately. This dependence on labor is reduced. And at the time of these festivals and all, our dependence on labor is very low, and that time either we have to be paid to very higher amount, and they maybe go on a leave, so we have to be compromised on our service level ultimately. So that we will be in this center we did very well, and in this festival time we not face any challenges on that part. Second part, efficiency of this truck will be improved, and also improved in this Gurgaon center. Third thing is customer ultimately is getting the benefit of that, because ultimately we are able to improve our service level due to this automation. And this operation efficiency is very key factor in any express logistic industry, where we fighting on a time sensitiveness and all, where we deliver on time. Service level must be like 95% plus. Every customer is expecting from us, and we are able to do with this kind of automation. Yeah.
Okay. Thanks a lot for your elaborate answer, and all the best.
Thank you.
Next is Dalal and Brocha.
Yeah, hi sir, am I audible?
Yes, please.
So my question is, I want first of all a clarity on the new businesses that you have added, that is Rail Express and C2C and all those kind of businesses. Currently, you said that you had a 17% growth YOY in those kind of business. So what percentage does it form currently of the top line, the new businesses?
I just said it is a contribution of these all revenue put together is 17%. I am not said as a growth basically.
Okay, so all these new businesses are currently contributing 17% to the top line.
Yes.
And the previous year they were contributing around 15%.
15%, yeah.
Okay, and what kind of growth have we experienced on a YY basis?
So again, if you see like rail has a higher growth in there, the number is very, low numbers, or, so that's why it's kind of like in rail we have taken a growth of like 20% in this quarter and others. So this way. Okay. Other all services are similar one what we have in a surface growth basically.
Okay. And so my second question is on the capex front. So what is the capex that you all are estimating to do in this fiscal?
So we anticipating a capex of 90 to 100 crore rupees in this year.
Okay, 90 to 100 crore of capex, right, for this fiscal, and the total estimate of 500 crore till 2028, that remains same, right, which you all are targeted for?
Yes, there is no change. Yeah, absolute correct understanding.
Thank you, sir.
Thank you.
Keshav, you can go next.
Hello.
Yes.
Am I audible?
Yes, now audible, please.
Yeah. So I wanted to check on the branch expansion which you are doing. So initially we used to see a figure of around 25-30 per quarter, but now it has pulled down to 5 to 7. So what is the outlook over there?
So basically, this is if you always see in the first quarter, we opening up the low branches because there is a transition period of our all employees from one location to another and all. So that's why usually opening 10 to 15 branches. This time we opened 5 branches because there is some other challenges also, kind of the scene flood and all. So this is not unusual thing. We will be keep a target of opening up 70 to 75 branches in this year, in a full year, and we will be maintain that. Nothing unusual.
So my second question. Okay, and my second question would be, we had to downgrade our guidance. Like initially we had given a guidance of around 2,000 crores revenue by 2025, and now we have tapered it down to around 1,800 crores. I think by this year we will be closing of around, 1,400 crores. So how confident is the management in achieving 17 or 1,800 crores by FY25?
Yeah, so as our MD has explained on that, we have taken a target initially for 2,000, obviously in a 5-year or 6-year back, and there's all situation depending on economy, how economy is moving. Everybody has earlier talked about 8% plus kind of growth rate and GDP, and now is maintaining like 6.5. So you're always saying, our growth is like 2x of GDP growth rate, and we continuously, did that. And we will be keep continuing, and we will be keep 1750 crores revenue for sure for in by FY 2025. And this is also like you see demand is low by continuous inflation in last 1.5 year, and so kind of like fuel cost is so high, like increased by 60%. Nobody has thought of that. So some situation is arises which is beyond control, and then we can't be do anything on that. And yes, still we did on a like 2x of GDP growth rate, and we will be keep going on that.
Okay.
Yeah.
Thank you.
Please.
Tanushree, you can go.
Tanushree, your line is unmuted. You can go ahead. I think we'll go to the next participant.
Hello. Hello.
Yeah, Alisha, please go ahead.
Yes. Yes. Hi, good evening. So two questions. One, we earlier also used to talk about a margin expansion of about 100 bits annually. Do we believe that is still possible?
Yes, in this year, Lisa, in this year we're trying to improve our margin level at least 50 to 75 basis point in this year, and in this quarter one we already improved like 30 basis point, and we will be keep growing on that pace. Because this is a part of strategies. We had like a strategy to be improve my price level, which is we did already like 1%, and hopefully will be done another 1% in the remainder part of this year. Second part, our utilization level of truck will be keep continuing in the range of 84 to 85%. That will be help to us. Third part, obviously this increasing the this portion of this newly added services of like rail and all. We will be able to maintain growing this margin levels of like last year we did around 16%. So this year hopefully we'll be having 16.5 to plus margin level on EBITDA level. Yeah.
And next year, when we're targeting the 1750 crore of revenue, will a 20% kind of margin be possible? Because that was the earlier aspiration.
No, so in last annual conference we said now we are targeting to be 18%, because again if revenue is not achievable, so margin will also be come down. So we are taking a target of like around 17.5 to 18% now.
And the competitive intensity in the last 2-3 years in our segment, especially in the last couple of quarters, has increased significantly. Do we feel that is impacting our growth and our margins, where we had to revise our guidance downwards, or is creating a challenge for us?
I think Chandra sir will give an answer on that. Chandra sir, you would like to answer on that, please?
I don't think that is the case because the segment that the competition is in, they may be saying that they are in the same line of business, but they're actually, the pricing that they have is more towards the cargo side, the more towards the freight side kind of business, where they're not doing express, but they're doing the freight kind of business. So I don't think that the impact has been here. The reason why the guidance has come down is only because of the economy, what I keep saying. Not even with the full, I'm not sure, and what I read is the PLI scheme has been announced. How many lakhs of crore investments have we heard is coming in? Nothing as of now. So it is totally depending on the way the current manufacturing is moving, and the way it will be going as per the inflation and the interest rates move forward. So with that, we have to understand that fundamentally the company is very strong, and there is nothing that the company can do, go to the space or something, and try to get business with margin. So I think rest again, be assured that it is not that the competition or structurally there's a problem. Most of our competition has structural problems, has manpower problems, has no branches. They only do top line to keep everyone happy. But we are not like that. We are a company that will ensure that we are giving full justified return to our shareholders.
So that's the point. We are focused on profitable growth. Competition is focused on growth at any cost and will somewhere start putting pressure on everybody in the industry. That's what we're trying to understand. That is that making us maybe leave unprofitable or less profitable business, or
It is.
by competing with them, impacting our ability to do the 100 bits plus margin
So,
expansion that we used to work with.
so we started off with that low profit business only, right? We were doing that. The reason why we left it is because it does not add any value for growth. We cannot do any automation. We cannot do any sort of new development. We cannot do AI development. Nothing. So all this again is a fund is basically it's the output of profitability. Now we are also not taking 10,000 crore loan or something like that and trying to service the market. But question is that the top line, if you see, is again it's a fundamental of how the economy is. If I try to get that 2 rupee, 3 rupee business, it will never allow me to grow in a structured manner. I will grow just for the sake of top line growth, and I'm not really keen on that.
Sure. And just one last clarification, the newer services that we were talking of, which the share of which is 17%, they offer relatively higher margins than our core express business?
No, all margins are same. It's the propensity for the business to take on competition. The rail takes on the air competition, the air cargo business, which is anyway a dying business in India.
Okay, great. Thank you so much.
Mayur, you can go next.
Hello, good evening. Am I audible?
Yes, Mayur, please go ahead.
Yeah, so thank you for taking my questions. And sir, there have been disturbance at my end, so there is a possibility of some repeat. I've lost a couple of statements, and yes, I'll confirm some of them. So, sir, what we are saying now is instead of 2,000 crore in FY25, we will do 1,750 crore by FY25, and instead of 20% margins, we are targeting 18% margins. Is that what I got?
Yeah, correct. Yes, correct understanding.
Right, sir. Sir, and it was good to hear that we focus on profitable growth continuously. It's not very easy to downgrade our own estimates a couple of times earlier. Earlier we also had 2,000 crore in FY20. During 19 we had 4-year targets of doubling. Then FY25 we had this 2,000 now. So it's okay to downgrade as long as the quality of growth is intact. So best wishes for that. Just wanted to understand, we have large corporates and MSMEs as 50-50 as share. What has changed in the last 3 to 6 months that is bringing about this kind of a downgrade in our outlook?
I can answer that question. So you have to look at it from two main factors, inflation and interest rate. From last Diwali, both have been on the rise. And what has happened is again, because of the reason why Q4 wasn't as for the whole economy wasn't as great is again because the sentiments were very weak. And we should not forget that just because we see one or two sectors being very glamorous in growth, that the whole economy is doing well. We have to really see what is the situation down the road. When we go down the village, when we understand and talk to people, not in the big cities, what's going on. Yes, people do have enough savings, but the fact is that the companies are not really, manufacturing companies are not really expanding. They're not putting up a new factory. They're not doing anything rather substantial. Yet, we are able to ride the wave of the GDP growth and extract the business. So, like I always say, if I want 10,000 crore top line, very easy. Our group could have done it, long ago. We could have achieved 1 lakh crore top line also with this kind of, situation. where would we be still with that? It would not be, we would not pay anything. We would not be able to eat our food, the same day without taking a loan. So that sort of situation we don't want to be. And of course, the understanding is that because of these two factors, high interest rate and inflation, the entire economy had a very subdued growth. And the third biggest factor, which I would like to highlight, is that economy has emerged from a high base, high growth, high volume base because of COVID. So that is all now subsiding and all that is all equalizing. So you will now see the real growth going forward.
So, sir, will it be right? I mean, it's just in a different way I'm trying to put it. So, will it be right to say that current GDP growth remains at overall number remains broadly intact, but it is driven by government expenditure. So, from our perspective, when we say B2B express, is more on the consumption kind of economy where the growth in other verticals also we see being subdued. So as long as that remains subdued, our growth trends would be more aligned to that part of the economy, and hence this is playing out, right? Will it be right?
But we have a backup. We also have MSME, a large chunk. So that really takes us forward compared to other companies.
Okay. Sir, any thoughts on expanding ourselves into 3PL or any other segments of the logistics?
We can study 3PL market, how it is playing out. All the other companies have very large top lines, but they're not able to sustain, they're not able to move forward, even with captive business and this and that. Because logistics is such a industry where the profitability will always be at question, and it will always be at people's minds where India, especially in India, where the cost structure is so high and the complexity is so high that making a little bit of profitability is also a big challenge. So, if you look at it globally also, logistics companies will not be able to give that kind of return that we are giving, only because, again, if we place the same model in another country or another situation, we will also get that top line. But in India, because it is still evolving from VAT to GST, and with so much political issues here, that going forward is, for any industry, is always an uphill task. But yet we are doing it.
Sir, last final question, just to clarify. Sir, do we have any play on supply or transportation with respect to export and import side of the economy? Do we have any alignment there, or will it be largely domestic and fulfillment and those kind of?
We have international air cargo, and as you know, we all know that international air cargo is again something new that we are doing, and it's growing, but not to the level that we want. Because again, the challenges of doing that business from India into India is very, very complex. We can book a aircraft also and send material out. But if somebody wants to send material into India, it is so complex, to import material, that sometimes, no matter what we say about Gati Shakti and all that, sometimes it is kind of like impossible to get the economy or that business growing and going for India.
Okay, sir. Thank you and wish you all the best.
Thank you.
Harsh, you can go next.
I just wanted to clarify if I missed, what is the FY24 revenue guidance and EBITDA margin guidance?
So Mr. Harsh, we have on part of 13% on volume side and 14 to 15% on a revenue side. Yeah.
Tanushi, you can go next.
Yeah, hi. Hello.
Yeah,
Yeah,
please.
I'm Karan. I don't know how it is showing Tanushri there.
Yeah.
So, my question related to the value chain. First of all, I want to know the value chain of the businesses, the fast-growing businesses, or the major contributing businesses, which is your Surface Express and also the Rail Express, where we can, create the value, expand our margins. Expect what we are doing, the sorting centers. Other than that,
Chandra sir,
want to
you would like
understand.
answer on that?
I could not hear the questions completely.
Yeah.
Okay.
Mr. Karan, can you repeat, please?
Yeah. So, in a simple word, I want to understand the value chain of our major contributing businesses, where we can create the value or add the value in our supply chain. Surface Express, Railway Express, because these are the most profitable businesses as well.
So
Right?
your question is?
Yeah, the value chain of the business.
I don't understand. What about the value chain? What is the value chain?
See the margin expansion.
I think, Mr. Karan, you want to know. So basically, if you see, there is a combination of two type of customers we have, as Mr. Chandra had mentioned. So we had 50% businesses from MSC customer and 50% business coming from the top 3 or 4,000 manufacturers of India. So that's why if you see value chain is because we carrying the kind of high value cargo in this industry. And that's why its value is there. How fast we deliver to their customer, it is important. Second importance is there because we delivering the goods to our customer's customer. Like take an example where we delivering the goods of Marutis to their dealers and retailers across the India. So that is the value chain we creating. How with good behavior we delivering, and obviously on time, and obviously on a debt free. So these kind of thing, and with the fully compliant of e-way bill and everything. So that kind of value chain is there, and ultimately, that's why it's a high growth business, and this is growing very fast. And second part, yes, these are the similar kind of services. Mode is different. Like in rail, if you take an example, we moving the goods from the through passenger rails. So what we did, we are giving the competition to my air business companies, where we diverting their business from air to this rail. And why it is having high traction, because they are getting cost reduction of almost 67% to 75% on where they're supposing somebody charging of 100 rupees per kg for through air, we charging in a rail like 25 or 30 rupees. So that's why this is a value chain we creating for through these new services. Second aspect of that, like if you talk about C2C, this is also in this segment where we like picking the cargo from two destination and putting in a two location, we picking the cargo and then delivering on a one location, and then in return we utilizing that truck from our normal business from that destination to back to this origin place. So that's why there is so many different services having the different value chain for that, and different customer profile also there. In our case, the good thing, because we have the highly diversified our customer base in terms of MSME and corporate, in terms of no dependence on a big customer. Like my top 25 customer is not giving more than 15% revenue to us. Also, like my 5 major segment contributing only 55% revenue to us. So that sense, we create a long value chain for all the businesses separately, or you can say services separately. Yeah. I hope I answer your question. Yes, Mr. Karan.
Yeah, fair enough. Next, related to the sorting center, I know that is, I think, the profitable kind of thing. the model is profitable globally as well as about the e-commerce, large e-commerce business also doing that. But in India, except us, any competitive player doing the sorting center? Do you have any fair idea?
Yeah, so basically, you rightly said in India, no one has this B2B kind of sorting center in India. We are the first company taking this risk, and efficiently we run that show, and that's why we are the first one to launch this, and we are able to reduce this holding time of truck, because now the probability of service level is higher. We can understand, like earlier, supposing my truck is load or unload in 6 or 7 hours, put together these two activities. Now it is reduced to 1 hour. So you can imagine like 80 to 90% time has cut for that, and dependency on labor is also reduced. So that's actually, this is the fantastically, customers are happy for that, and this is ultimately in India, operation, to create a operation efficiency continuously, it is very, very important for any express logistic company, and we, with the management team support and management support, we did that.
Okay.
Yeah.
So as we have the presence in more than 200 plus countries, right?
Yeah.
So we are facing competition in terms of this asset-light model, because we are more focusing on this asset-light model. So globally, who are the players we are facing the competition with, and also they are asset-light model. So FedEx and Maersk kind of players are also the asset-heavy players.
We are not present in 200 countries. We have agents in those places, and we are doing air cargo, import and export. We are not doing. We have the ability to send material to those countries and pick up material from those countries, and by air only, not by sea.
Presence in the sense we are delivering there. Okay. So that's the benefit of the asset-light model is that that's great. You achieve this thing. In the asset-light model, you are net zero kind of debt. So that's great. But the over-reliance on vendors, when we think about some demerits of asset-light models, so over-reliance of vendors is the point coming out in the mind. So do you think on the fleet side, when you are the containerized kind of model you have, so on the fleet side, do you see anything over-reliance on the vendor? Or do you see anything the challenge from the vendor side?
Tanvishri, I must tell you that the important thing to note is that we have owned vehicles before, and again the financial ratios before and after are very different. So, if I will suggest that you have a look at maybe the presentations before, earlier before listing, or maybe talk to Mukti separately as to how it was when we operated vehicles, when we owned and operated vehicles versus going asset light.
Also, Mr. Karan, basically if you see, we highly diversified on that side also, and that's why this is the fantastically we are running this show, and now everybody is following us. In India, is a different aspect of that, because there is a huge fleet is available. Supply side is so high, and it is easily available. So what we did, these 5,500 trucks is owned by almost 2,000 people, and we also taking it on a local basis. So that's why if you see, this diversification is important in India. Once you're giving a thrust, like depending on 100 or 200 people, then there is a problem. So what we did, since last 1 decade, we fantastically run this show, and with such kind of high returns. Why we are able to do that? Because we have the high diversification of that. Because we are not depending on a particular route, we are also not depending on a particular vendor. We are doing like 2-3 vendors on that route, so nobody can be monopolized on that. Second part, good thing in, we are able to get the credit from these guys. In India versus if you see other companies, or supposing I own vehicle, then I need to put the money before. So that's way it's fantastically running, and it is a company's DNA where we know how to, ground level working, how to deal with these kind of people. Because how we are able to do that? Because we have the highest transparency. Every truck owner knows what kind of cash flow he will be generated on a particular month, before start of this month. So that's why in India, nobody can be projecting that. Supposing one guy is owning truck, so they don't know how much cash flow they will be generating this month. But once they will be did an agreement with us, they know what kind of cash flow they will be get, and we give continuously paying the money to them. So that sense, various things we did. It is a completely ERP driven. So there is no question of our dependence on these all supplier side. We did well, and in each segment we have different kind of. And again, interestingly, these all are the individual guys, like owning 2-3 trucks. So that we also did, like we are not taking more than 5 to 10 truck, more than almost like 7 truck from the one guy. So that's why we did so many things internally, and then we are doing the show. Yeah, I hope I am able to answer on your question, please.
Last question from Deepak.
Yes, please.
Yes, sir. Am I audible?
Yes, Mr. Deepak, please.
Sir, the lower growth rate that we had in this quarter, if you can explain if it was, industry specific, maybe the discretionary side like fashion goods and electronics were on the lower side, or was this lower growth across all the B2B corporate clients that you have?
Chandra, you would like to answer on that? Okay, so basically, Deepak, if you rightly said, there are two segments which is not did well, like on a fashion and lifestyle products are not did well. There is a low demand on that, and second part, obviously, everybody heard about this electronics is not moving and is a slow growth. Like if you see in North India, there is no AC cell at all. So that's why, yes, you rightly said it is a segment wise, like Mr. Chandra has said. Auto has nicely done well. Engineering is keep going. Pharma is always all weather friend. So there is no problem on that. So yeah.
Okay. And sir, on your outlook of 13 to 14% growth, if you can break it up for us, for your ongoing business, what should one look at, and for the new business, which is 17% of your sales, what should be the volume growth that one should expect?
So basically, if you see these other services will be, I think in year end, we will not be more than 17.5 to 18% maximum. It will be same kind of situation would be happen. But obviously, we are keep adding the new customers, and always Q1 is, before COVID time, if you see, there is always low growth there. So we will be keep continue to add the new customer and get the business from, SME and, corporate customer both ways. And now festival season will be start. So I think this lifestyle product, and that will be also ramp up the demand and all. So we are hopefully, achieve that.
Okay, so one should assume that both the segments would grow at a similar rate, and not that the new services, maybe grow at a higher rate. It will be similar across both the verticals.
Yeah, exceptionally like rail maybe grow kind of 30%, and C2C also grow like slightly higher, like maybe 17-18%. Rest, I think, would be in the same way.
Sure. And sir, have we seen any green shoots, in the month of June, July, August, as we progress towards, better times? Are we seeing any revival in the demand?
No, so demand is continuously like, April month was the weakest month of this financial year. After that is each month on month we are growing on that part, I can say.
Thank you, sir.
Yeah. Thank you.
Participants, that was the last question for the day. Mukti sir, if you have any closing remarks.
Chandra sir, you please.
I must thank you all for attending the conference call arranged by TCI Express, and I look forward to speaking to everyone again post quarter 2. Thank you.
Thank you, everyone. Thank you, sir.